disaster. So I hate to sound so unremittingly bearish, but there's plenty of reason to be bearish. I mean, there's just plenty of reason to be bearish. That's all there is to it. And listen, Chris, I can't wait for the day when I can dump all of my gold and gold stocks and buy solid dividend-yielding stocks in the U.S. and elsewhere, because the longest trend in existence is the ascent of man, and that's going to continue. So I'm very bullish from that point of view, but not right now. Not right now.
Doug, you've been a big fan of moving resources offshore, outside of the domestic economy for some time, and you've been also concerned about exchange controls. With all of this turmoil that we're seeing in the economy today, not to mention, as you say, in Western Europe, have you become even more concerned by the threat of possible exchange controls?
I have little question that we're going to see some form of exchange controls in the U.S. and many other countries, because the one thing you can count on is government never controls itself. What it does is it controls its subjects. So, sure, they're going to have some form of capital controls. I mean, in the United States, we have something on the books called the interest equalization tax, which used to be 15%. I don't know when they cut the interest equalization tax out of like 20 years ago, 25 years ago. So they could put that up. What I'll say is this. Anybody who doesn't transfer significant assets outside of the country where they live, and he's going to get exactly what he deserves. He's leaving himself in a lobster trap, and he's going to get cooked. So people, your biggest risk today is not an investment risk. Your biggest risk is a political risk, and people don't understand that. So you've got to diversify politically. This is absolutely critical. Very few people are going to do it, and they're just going to be devastated by not doing it.
We've been lulled into complacency, haven't we, by near 75 to 100 years of relative stability here in the U.S., and we just haven't seen the ghettos of 1939, 1940 Warsaw, have we? We just haven't experienced Argentina-style inflation and Hungary-style hyperinflation yet. There's just no one alive today who lived through the Great Depression, and if they are alive, they've probably done exactly as you've told them to do. So if we could shift back here for one moment to the housing situation. Robert Shiller of the Case-Shiller Index, he's now calling for another 15% slide in the median domestic home price here, which would take us down well under 30% off of our 2005-2006 peak highs in the housing market. I know it's difficult to look at the U.S. as one housing price. It's almost unreasonable when we look at Southern California, Nevada, Florida, and some of the harder hit areas like Detroit and Cleveland and Memphis. But if we bring it all together as a conglomerate, do you think that we're maybe only in the fourth or fifth inning of this housing pullback?
Yes. Yeah, we're still early on, and the big problem with housing is the fact that all American housing is built upon a pyramid of debt. Very few people own their houses for cash. They all have mortgages. Sometimes very, very substantial mortgages. And sometimes, very often, mortgages where the rates are going to readjust upwards. Interest rates are at all-time lows now. So it's going to be a triple whammy. In addition to that, the municipalities in the U.S. are going bankrupt across the board. And real estate taxes are the main places where they get their income. So, your real estate taxes are going to go up. The interest rates that you financed are going to go up. People are going to lose it. There's no way out of this. They've got a long way to fall. The real estate that I own, I still own some real estate in the U.S. I own it for cash, and I don't care. It's a consumer good, which is the way I treat it. But I've been buying a lot of real estate here in Argentina and Uruguay, because these markets here are cash. When you buy something here, a house or land, you pay cash. There's no financing. There's no mortgage. So what it means is, number one, prices are much lower, much, much lower for what you get, and they're stable. And there are other things. So I've decided to diversify into these countries primarily at this time, although I'm very Catholic, meaning universal, and I'll look anywhere in the world. I just prefer it down here.
It sounds like great advice. Well, my very special guest today, Doug Casey, editor of the International Speculator. If you'd like to find out more, please direct your internet browsers to caseyresearch.com. That's all one word, CASEYRESEARCH.com.
I'd be happy to hear from anybody with any comments or questions if they go to caseyresearch.com.
Would you like to share your email address with them?
Yeah, I'm drc at caseyresearch.com, or they can just go to caseyresearch.com and send something to info. That's fine. It'll get to me, and I'd be happy to hear from anybody. But I'll just sum it up by saying this. We're looking at something that's not just the most serious thing since the 1930s. My personal point of view on this is the most serious thing in 200 years, and it's just beginning. So you'd better hold on to your hat and take it seriously.
Very well said. We'd love to hear from you, have you back on the show, even if it's just for a quick little update on markets and trends that you see unfolding in the markets, at least once a month.
No, that would be fine, and especially since I'll be in New Zealand. I mean, the internet connections here in Argentina and Uruguay are absolutely as good as they are in the U.S., but the phones aren't as good. Now, I'm going to be in New Zealand for the next 3 months, and the phones, as well as the internet, are just or better than in the U.S., so it'd be very easy for us to talk when I'm in New Zealand.
We appreciate your taking time out of your busy schedule today for us, and continued success.
Thank you, Chris. Talk to you later.
Guest, Doug Casey. At last count, he has visited almost 200 countries. In fact, he's written a book on international traveling and living. Doug is currently a venture capitalist and